Hello guys, so we're going to be looking at a very quick review regarding the trade setup, the weekly forecast I've been sharing in the gold pair and how that excellently just played out, and we're utilizing that for our trade executions. So basically what we saw, we identified this weekly fair value gap for a very long time ago. We identified our weekly fair value gap, which is actually here. So this is a weekly fair value gap where price returned to mitigate. So we have the mitigation of that weekly fair value gap, which we can clearly see from the weekly time frame. And basically we identify our draw on liquidity, which is actually this candle high point, because we can see bullish momentum to the upside. We can see how the volume of this candle closed above the high of this other bullish candle. We have the sweep of liquidity because this gave us the highest high point, and now we can see price return further to the downside, swept the low of this and also the low of this candle and also the low of this candle, and now we're having this bullish momentum. So basically, we identified the draw on liquidity to be this high point, which we're looking forward to see how price is going to take that out. So this is a forecast from 2 weeks ago, so we're just trying to have a review regarding that and see how that played out. So clearly we saw this as our draw on liquidity, so which is the buy side liquidity. So that is our draw on liquidity, which we identify. So let's mark that out so that we can clearly work with the zones we are identifying from the charts and look forward to see how we're going to see the entries from the lower time frame. So this is the draw on liquidity, and in extension, what I showed us last 2 weeks was this weekly rejection block. So we saw this weekly rejection block. Let's clearly also mark that out, the weekly rejection block. So there also we have our weekly rejection block. Once we did identify the draws on liquidity from the weekly time frame, we clearly went back to the lower time frame. Sorry, let me do away with the price labels. I don't want the price labels to appear so that we don't really have very clouded charts. What we can now see, since we've established this from the weekly time frame, we drop to the daily time frame. And what clearly we saw from the daily time frame is we saw clearly how price was reacting at this bearish order block. So we identified the reaction of price at the bearish order block. But since what clearly we saw is that price is strongly being attracted to the buy side liquidity from the weekly time frame, we can see we're having more movement to the upside. We can see we have volume close above the previous week, also this candle week. So from the daily time frame, we identify clearly a bearish order block where price clearly mitigated on Friday. So we can see the last candle that was formed was the Friday candle. Price mitigated that. So since from the weekly time frame, I told us to expect more bullish move. So what we did was to identify this daily inversion fair value gap. So guys, don't think I'm making this up. You can go to the channel, go back and review and watch the videos on that weekly forecast. It's clearly in the YouTube channel. And so we identify the daily inversion fair value gap, which clearly also, I outlined the mean threshold of that fair value gap. So this is the mean threshold, which is also called a consequent encroachment. So I told us before we can expect any bearish movement to the downside, we have to wait to see that price breaks this daily inversion fair value gap before we can now say we are going bearish to the downside. But clearly I told us if we are expecting bearish movements, this was what I clearly told us last 2 weeks. We're going to see the fall of price to the downside. Then we see this retest this, and then we have the bearish continuation to the downside. And then I told us that if price doesn't break this fair value gap to the downside, it doesn't break it to the downside strongly with impulse, then we should expect it to act as an inversion fair value gap. So meaning we were to see that price would return to retest, and then we have the bullish continuation to the upside. And I told us to just anticipate the clear of this buy side liquidity. because we have this rejection block, so we could have reaction to the downside, bearish. So since from the daily time frame we saw all of this also and identified the various zones, we went now to the 4-hour time frame. You can just go to the 1-hour time frame and begin to look forward to your entries, but basically now I pointed out from the 4-hour time frame what we are to also expect is to see that we have that fall to the downside. If price breaks through this with volume to the downside, strongly to the downside, we should expect a retest and then the bearish continuation. So from the 4-hour time frame also, we're just working with this bearish fair value gap, which I told us to want to see how price would react at it before we have the push of price. Then it's going to act as an inversion fair value gap. So from the 1-hour time frame, what we can see also is just the same. We can clearly identify a valid zone to want to consider a bullish move, because now this is where we have the sell side liquidity, because we can see this is the pullback before the bullish continuation to the upside. So clearly what I allowed to happen was to wait and see how price trade within this fair value gap, which I told us to anticipate it to act as an inversion fair value gap. So let's play price to see what happened. So we can see the fall of price to the downside. So what we can see was price now fell to the downside here, giving us what seems like price is going out of this fair value gap and then going to just continue bearish to the downside. So let's check the 4-hour time frame. So here in the 4-hour time frame, what we can see is that price is reacting at this bullish order block. So we waited for the movement of price to see how volume is going to be. If volume is going to intensely fall to the downside, then we know price will retest this, and then we have the bearish continuation to the downside. So let's play price and see what clearly happened, because I paid attention more to the 4-hour because the 1-hour was so noisy. So now what happened from the 4-hour time frame was this movement I saw. How price now returned. We can see price respecting the mean threshold, trying to send price to the downside, but here you have impulse to the upside. After price did what? Mitigated this bullish order block. Are you seeing it? We are in a bullish trend. We are in a bullish trend. So price return mitigated this bullish order block. Now what you can clearly see from the 4-hour time frame is that here we have the market structure shift. We have the market structure shift now established from the 4-hour time frame, which you can clearly see here, because you can see volume close above this high points here. So we have market structure shift in confluence. What helped me establish that the market will continue bullish is the fact that we see price fail to print a new low point after the pullback to the upside. We can see the pullback to the upside. Price now failed to give an impulsive movement to break this low, taking out this bullish order block, because we can see price took out the inducement liquidity. So we have the rate of the inducement liquidity. And now price pushed to the upside, retested the fair value gap, but failed to give an impulse to take out this low point. And then we saw this movement that gave us this market structure shift. So we can see price took out liquidity here. And clearly what we can now see is the market structure shift. We really do not have any fair value gap here. This return already retested the mean threshold of the fair value gap, now acting as an inversion fair value gap. So clearly what I now did was now to identify what the bullish order block that price returned to in the fair value gap zone, which is now acting as our inversion fair value gap. So you can clearly see that. So let's do away with the inversion fair value gap. So now you see price respected this bullish order block, and then we have the push to the upside. So my expectation is to see the return of price back into this order block, and then we frame what? The bullish continuation. And then what we are going to see from the chart is our first draw on liquidity is going to be this high. This is the first draw on liquidity before the draw on liquidity we established from the daily time frame. So let's do away with this, since clearly we can see that price mitigated the inversion fair value gap, and we're having price giving us a bullish sense of movement to the upside. So we can now clearly see that we've established another draw on liquidity from the 4-hour time frame, which is this draw on liquidity. So let's clearly make that visible and well labeled. So we have that as our draw on liquidity, because that's the most recent high point that price left in the market. So that becomes the next draw on liquidity before the daily time frame draw on liquidity. So now what we need to look at is in confluence to this bullish order block. You need to see that here you also have this fair value gap that price traded above. Price traded above this fair value gap and also above this other fair value gap. This is just a very poor price movement. So we can really mark this as a valid or ideal bearish order block, because we know that price is already strongly bullish based on even from the weekly time frame. So now we can see this fair value gap now acting as an inversion fair value gap, and in confluence within that zone is this bullish order block. You get it, guys? So that's another strong confluence. So what I did was now to go to the 1 hour time frame, and what we can see from the 1 hour time frame is we have this institutional order flow there. So you can see we have this institutional order flow, and clearly what you can now see is we have fair value gap also, and we are seeing price giving us bullish impulse. And clearly what you can see here, you see price traded above this bearish order block from the 1 hour time frame here, and we are seeing more momentum to the upside. So basically you can see from the 1 hour is this is what a trend line liquidity, and in extension we have what the high point, which is now what the main first draw on liquidity. So basically now what we'll be waiting for is the pullback of price into this zone, and then we continue what bullish to the upside. So clearly you can see we have what the market structure shift here already what established. We have the market structure shift established and this push of price to the upside. So basically now I can just decide to set a pending order for my long position from the high here, the stop loss below this low, and this is the first target. This is going to be the first target because that is the first draw on liquidity. But since we know that we've established a strong reason for price to take out this other buy side liquidity from the weekly time frame, let's check out the weekly time frame. So we can see that from the weekly time frame, our expectation is that price should take out this draw on liquidity. Here in the 4-hour time frame, what you can see is this is the order block, the bullish order block. So this is the draw on liquidity, right? And now back to the 1-hour time frame. So here clearly in the 1-hour time frame, what we can see is we've established this institutional order flow. So here's the draw on liquidity, and in extension we have the ideal draw on liquidity here. So we want to see price takes out that high points, clears the high points. So let's play price to see what happens. So we can see clearly that price returned back into that sponsorship zone, activated our entry, and let's further play price to see. You can see now price took out this trend line liquidity, aiming for the swing high points. So let's play price to see what happened. Now we can see price took out that liquidity. And for those on the mentorship program, I always stress that when price takes out a liquidity, at times we can see a reaction where price gives a little reversal movement. That doesn't mean we are in a reversal state. No, don't get it wrong. But most time when price takes out your profit target, which is actually a liquidity zone, we're going to see a return. Price will give more of a bearish reaction, meaning if you're in a bullish market movements. So let's play price to see what happened. Now we can see that clearly that price took out that swing high points. So let's play price to see further what happened. We had price continuing more bullish to the upside. So what we can clearly see is from the 1-hour time frame, price created inducement liquidity here, because we can see the push, price pull back and pushed again. This swing low is the inducement liquidity low point. Price returned to it, mitigated that, and you can see bullish movement to the upside. So from this same internal structure, which is the expansive leg move for our major buyers, what you can see is now we have the break of this high point, because this is a pullback. Now price broke this high points here. So we have this internal break of structure, and in extension, the external break of structure. So meaning this is a strong sponsorship zone. This order block here is a strong sponsorship zone. In confidence, you can see it left a fair value gap. So basically, now let's do it with this zone so that we don't really have a very clouded chart. So we have that, and we can see we have the fair value gap below that. Price here created a bullish order block because we can see this engulfing. Price violated that to the downside. Now we can see this movement to the upside. So, and we can see price left fair value gap. So what we now have is, if you're looking forward to take more entry to continue bullish to the upside, what we can now see is that we have the inducement liquidity here. Price gave us this inducement liquidity because what you can see is price gave us this pullback, push again to the upside, created this pullback. Now we are seeing for the push. So if you're waiting for a return to want to execute your entry, what you can clearly look at is, now this is a decisional point of interest. This is the extreme point of interest. So clearly now what we can see is where we have the most recent impulse is here that broke this internal structure. We can see how price, because this movement led to price sweeping this liquidity before this fall that gave us the movement that led to break of structure. So anyway, this is a decisional point of interest, and this is an extreme point of interest. So if you're looking for a buy move, you can see to take price movement from this low points, this low we are seeing here where we have this rejection block. You could execute your entry here, but due to the fact that we have this fair value gap here, we could see the possibility of price taking out this low. Let's check the 4-hour time frame. So what we have from the 4-hour time frame is, basically my entry was just here, but I'm just trying to explain this and see what would have happened. So basically now from that we can see that this low is where we have the inducement liquidity, and we can see here we have this bullish order block that price created. Price returned but didn't really mitigate the body of that bullish order block. So price could take out this low, and then we have reaction again within this bullish order block, and we have the bullish continuation to the upside. So back to the 1-hour time frame. So this is a 1-hour time frame. So basically I could let's just do that. So basically I could execute another long position from this candle here, the rejection block, which also is a bullish order block, the stop loss below, and then we have this high again. This is our next target. So basically now we have two positions in this particular trade setup. So let's play price to see. So all you can see is, okay, price was just consolidating, returning back to the downside. Okay, price returned to the downside. Let's see if price activated this trade setup. Let's maintain that. Okay, so price activated that, and you can see we're in that position. But let's see, I think price swept this low point. Yeah, price swept this low point to grab liquidity. So we can see that price swept this low because we have this fair value gap here. Price would have decided to dip more to the downside and mitigate this fair value gap before pushing to the upside. So what we can now see here is we have this candle close above this candle, because this is the last up close candle before this bearish movement that took out this liquidity, and we have this change in state of delivery because you can see that volume close above that. So we have change in state of delivery, and we can also see we have this inversion fair value gap, because inversion fair value gap, one of the valid reasons to an inversion fair value gap is that it sponsors a move that also takes liquidity. So basically now with this movement, this was an order we just set from this order block. Now we are trying to find an entry model when price mitigated that and activated our trade. Possibly we want to take another position, and clearly that is what we can see. So you want to add a long position. So basically it means that we can set a long position from this inversion fair value gap, our stop loss below the low of this rejection block, which is also a bullish order block, and we target this high point also. So you can see we have two positions already running. This almost went to TP. I think I closed this trade when I saw this bearish engulfing falling back to the downside. So I didn't really consider this ones, but for the course of this review, that is when we are considering this. So let's play price to see what happened. Okay, price just left. Okay, price in return. Now we can see how price went to the upside and then took targets, cleared this draw on liquidity. So this is just a quick review, guys. The student in the mentorship program got more deep reviews to more of the trade setup we do execute. And if you want to be gaining from our free trade setup, then you can join the free Telegram community. The link to that is in the description section to this video, guys. So cheers and God bless you all.